Hey guys, you're listening to the Tascha Labs podcast. So many of you know that I have a free newsletter, right? So when people sign up for the newsletter, I ask them, why do you sign up for the newsletter? And guess what is one of the most common answers that I got? I think it's quite straightforward, right? It's because it's a Web3 crypto newsletter. The most popular answers I got is like, oh, I want financial freedom. Therefore, I'm here to learn more about crypto. So when I hear that kind of answer, it's like, oftentimes I just go, okay, but you do realize these two things don't really necessarily go together, right? You can learn a lot of crypto, you can know a lot about Web3 and still lose a ton of money. Okay, and people do that. Like there are people who they know so much about like technical things, like what's the like different projects, and they they still don't make money. Okay. On the other hand, if you have a what I call a like an internally consistent framework in making your investment decisions, you don't necessarily have to know a lot about projects, about crypto, and all the 9 yards in order to be consistently profitable. So I think sometimes people confuse these two things. Like you like being knowledgeable about a particular field, does it give you some advantage in investing in the field? Yes, but does it necessarily mean that you will like, is there a necessarily positive correlation with your investment success in that field? Not necessarily. And I think the thing that a lot of people like trip up on is that many times people don't have a consistent investment framework in their decision making. I will elaborate more on what that means, right? Because I know now you're thinking, okay, that sounds well and good, Tasha, but it's very abstract. So, but that's really super important. What I mean is when you're making decisions, you want to make sure every step of your decision making, you have a clear goal in mind. You know, like every step, like how you're making the decision and why you're making a decision. And all the steps of decisions that you're making should be integrated, should be consistent with each other, right? So one of the like a recipe for unhappiness in life is like you have, if you have a lot of inner conflicts, if you don't have a consistent approach in life, then that leads to a lot of unhappiness, right? So whatever your approach is to life, you like the important thing is like you've got to be internally consistent. Otherwise, you're just like standing in your way a lot of times. And it's the same thing with investing, right? So there are so many ways, there are a lot of ways, different ways to make money, but each and every approach that you choose, you need to have a internally consistent framework. So, but a lot of times that's not what people do, right? So you can go back to, I made another episode a while ago, also talk about this. It's like, I think the title is why most retail investors don't make money. Okay. But essentially, it's the idea is like most people, what do most people do when they start like investing either in stocks or options or cryptos or whatever? You go like you hear something like someone is saying like, okay, this XYZ is super bullish and give a bunch of sound good reasons, right? And then you go buy the thing. But when people buy the thing, do they know like necessarily like how long are they going to hold it? Like what's the goal? Like what's the expectation from this thing? Is it going to be, obviously if you ask people, okay, when you buy this ABC ticker, right? What's your goal? Then they will say, okay, my goal is to make money, right? The more the better. But it doesn't work that way, right? Because that's not specific enough. And then when the time comes that they are like people are making the selling decisions, how are you going to make that decision, right? Is that like just because like market is going down, therefore you sell, or you hear someone on a podcast saying something, including this lady who's talking now, right? So you then you base like your decision on those ad hoc factors that are very it's not like a robust and robust approach to decision making that will guarantee your long-term success, right? It may like make you money once in a while, but if you don't have a consistent framework, it's hard to have success over a longer stretch of time, because these are repeated decisions, right? Like once or twice, you make a decision based on some ad hoc factors and you get lucky and you make money, but can you repeat the process like 10, 15, 20 times and still achieve the same result? And when you don't have a consistent framework, that's like becomes harder and harder, right? So, but anyway, so these are, I know, very abstract, but these are like things that I just have to say. Okay, so but to make this more specific, today what we're going to do is we are going to actually create a consistent decision-making framework for investing in crypto together, all right, from scratch. So to give you an idea of what I mean by like a consistent framework, so again, there are a gazillion ways to make money in the market. This is not the only way. I'm not like, this is not financial advice. I'm not suggesting this is the way you should go about making your investment decisions. But this is an example of what I mean by having an eternally consistent framework, okay? So, so in order to do that, I'm going to have to share some screens. Usually I don't do that because I know like people listen to podcasts like in your car when you're jogging or something like that, right? You don't necessarily look at the screen. And also it's just like easier for me to not have to share screens. But just because of the topic today, you know, I will have to share some screen. I'll try to be descriptive. So even if you're listening, you don't have like you're not like watching this on YouTube, you still, I think you should be able to get the gist of it. But obviously, ideally, you have a screen, right? Because this is I'm going to share some charts and so on, right? So so if you're listening, you know, just for the audio version, and if there's something that you're interested in, like following along on the visual level, just know that there is a YouTube version. Okay, so just go to tashalabs.com. It will be posted on tashalabs.com, and just go find the YouTube version. So basically, first of all, when you are making your investment decisions, you need to have a framework, right? So what do I mean by a framework? These are what I considered the components of your framework, like very basic components. And obviously you can have like a lot more components than this, but these are like key decisions you have to make from beginning to end in order to execute a investment transaction, right? You need to know, first of all, what is your time horizon, the big picture? Like, are you holding several minutes, several seconds, several hours, several days, weeks, months, years? What's your deal, right? That's number one. Number two, once you decide on what's your horizon, when do you enter and when do you exit? Those are the next decision you need to make, right? So what are the criteria that you're using to make those decisions? And then if things don't go well, when do you decide to take loss? What's the criteria for that? And then, you know, obviously these are like operational level, right? These four. But then you still need to, like on the bigger picture level, you need to choose like which tokens or which tickers you want to buy and sell, right? So how are you going to make decisions on that? And then finally, in terms of your, you know, management of your investment positions, how big of a bet are you going to make? And what's the basis for that decision, right? So you may think you have the answer. Maybe you have the answer to these, or you don't have the answer to these. But if you actually lay these questions out on paper, I highly encourage, right, you to do this exercise, actually just to write these questions down and see if you can give like a really clear answer to each and every one of those. Okay, so it cannot be when to enter. Oh, because someone on Twitter tells me to. That's not a framework. Okay, if you are doing that, then you will just be, you know, whipsaw left and right. That's the more likely outcome, right? And also, okay, so let's just go through these each and every one of these like step by step. So what's your time horizon? Your time horizon is going to determine the rest of these things, right? It's going to determine the rest of your strategies. So, you know, like I'm on Twitter, I get like tons of message on a weekly basis. People ask me, hey, can you like promote, like, can we buy a promotional tweet from you? Can you just tweet out to your followers to say, our token, XYZ token is super bullish, and put a rocket sign on it? So I get a ton of those, right? So, and do I say yes? No, I don't say yes, right? Why? Not because I'm nice. That's not the reason. Not because I don't like money, all right? But because I have a longer time horizon, right? So my goal is to live to 100 years old, 120 years old, if you listen to like some of my previous episodes. And so I have a long time horizon. So I want to build a longer time horizon brand. That means I need to sustain a certain level of reputation, right? So, but so that dictates my strategy in terms of what kind of decisions I make. But if on the other hand, if I have a short time horizon, right? If I have like a Twitter account, like I'm just like looking to cash out tomorrow, then I will certainly say yes to those offers, right? You see like lots of influencers on Twitter like promoting tokens left and right? So those are like being sponsored, right? Most of the time. So but that's like every like a promotional like thing that you put out is going to eat into your brand equity, right? But if you're just like doing a short term, if your horizon is short term, then it doesn't matter, right? Because you're looking to cash out tomorrow. If your horizon is long term, then that becomes a different decision, right? So that's just like analogous. Same thing with when you are making like investing decisions. So how do you think about your time horizon? Obviously, again, a gazillion ways to make money, right? You can trade on like a sub-second time horizon, but do you have the tools and skills to do that, right? On the extreme other end, there are people who like advocating, hodling for years on end. Some people just see it as like wear it as if it's a badge of honor, right? Okay, I sustained this like a 60, 70, 80% of drawdown over the bear market as if it's an honorable thing, which I just don't understand. Okay. So to me, like, okay, yeah, if stupidity is an honorable thing, yeah, sure, maybe. But seriously, I just don't understand. Okay. So if you're in an asset class that habitually has this habit of go down like 50%, have like 50% drawdown in a year, why would you hold multiple years? Like, even if the thing has like, even if your time horizon is 10, 20 years, but still, why would you be subject yourself to that kind of drawdown? So then people will tell you, by the way, I'm going into again, this is an example, okay? You don't have to follow my train of thought. I'm just telling you, if you are like constructing a investment framework from scratch, how I would think about it. Now, obviously, each and every one of us, we wear our color glasses in looking at the world. We all have our perspectives. So I'm telling you like one perspective, but it's like the process is the same, okay? So from my perspective, it doesn't make sense to have a multi-year holding for crypto because it's very volatile asset class, right? So, and then when you think about this, then what should be my time horizon? The sub-second, the minutes, the day trading like frequency, it doesn't really appeal to me because I've got other things to do, right? I don't like to sit in front of the screen, just watch tickers every day and every minute and every hour. So that's one. And secondly, because even if you do day trading, it's like crypto is a small market, right? So the bid-ask spread, even on the larger tokens, it's like relatively good. But if you get into like a smaller tokens, the bid-ask spread is like a super huge sometimes, right? So if you're doing like a really, really short-term intraday, like an intra-hour, that kind of thing, your risk is like much harder to control compared to like a traditional like equity market. If you're trading like a Tesla or Apple or Amazon stock, right? So that's also a consideration. So I do not want to go into like a super short, like a super low frequency, like a intraday kind of thing. I do not want to go into like a super high frequency, like multi-year kind of thing. So I want to find a medium level, right? So what is my medium level? Now you gotta like find a way to answer this question. How do you answer this question? You answer this question by actually looking at the data, right? You don't answer this question by just like come up with brilliant ideas in your dreams. Okay. So how do you answer this question? What is the time horizon that you should be aiming for? Now, this is when looking at some actual data will help, right? So this is a chart of the total crypto market cap, which is like a total. This is essentially just a total market index for crypto, right? So I don't want to go into specific tokens because I'm not here to recommending tokens, but it's the same deal because this chart is very representative because the crypto, like 80-90% of crypto tokens just move together, right? Because it's essentially one sector. If you think about like all the asset classes, like risk asset classes, if crypto is part of the stock market, it will be just one sector of the stock market. At least at this stage, okay. In the future, it may expand to, it may become part of everything, every sector. But right now, it's just one sector, just like healthcare, or technology, or utilities, or real estate. I don't know. It's just like one sector of the whole market, right? So this sector, like within the sector, the diversification is very limited. All the things move together. So this total crypto chart gives you a very good idea of how like the entire crypto thing is doing without we having to go into the specific tokens. Okay. So if you just look at this, you go, okay, we're on a daily frequency, right? If you just look at this thing, now, can you tell me what's the difference between if you look at this and if you go compare this crypto market trend with something like S&P 500 or with something, let's look at NASDAQ, okay? With something like NASDAQ, do you notice some like a similarity or difference here? Now, the similarity is these markets, risk asset markets, they all move together, right? But they're also different, right? So you look at this, this is a NASDAQ, right? So for example, we look at the beginning of 2023. We know that risk asset had a bull run, right? But even if it's a bull run, you look at how the NASDAQ moves. It's like goes up one day and then it's like it fades. And then goes up for another 1, 2, 3, 4, 5 days, and then it fades for 2 days. And then goes up 2 days, and then fade for another 2 days. So it's like every few days it changes its mind, right? It's gonna do a correction. It's gonna like change direction. Now, if you look at the total like a crypto market over the same period, what did it do? It started going up like January 1st started going up 1, 2, 3, 4. Okay, and then it took a little bit of break. But if you look at this continuous trend, you see like a series of green bars is almost like 2 weeks. Okay, continuously going up. And you can look, the same thing goes on the downside, right? You like since middle February, you see a market downtrend, and it's like a series of red. Goes down and down and down, and you see that every day. So my point is, this market has a much bigger tendency to trend either on upside or on downside compared to your like general like equity indices like NASDAQ or S&P, right? So why is that? So there are a lot of reasons, but one reason is just because the players, because the crypto market is much smaller, even though it's worldwide, it's like in terms of the amount of liquidities in the market, the amount of fundings in the market is much smaller, right? And also you have a much less diverse investor base. Now, if you go, it's like there are all sorts of people who are investing in NASDAQ or investing in S&P, right? Some people are seeking growth, some people seeking to preserve capital. Some people, they're doing like day trading, some people like doing like high frequency. trading. Some people, they hold the thing like doing like a Warren Buffett type of thing, or some people, they hold the thing for like 10, 20 years even, right? So there are all sorts of players with a diverse set of purposes in this market. But do you see the diversity in crypto? Not so much, right? So everybody's in the crypto. Do you have people, how many people in crypto investing in crypto in order to preserve capital? Not so much, right? Everybody is here is to speculating to various extent, because this is way out on the risk curve, right, so to speak. So people are taking on a bit more risk to get high returns. So you get a lot more like homogeneity across like the investor base in the crypto market compared to like TradFi risk asset markets, right? So as a result, you see like this almost like a one-track mind behavior, right? Either it's going up and it really consistently go up, and then, or it's going down. Once it starts to go down, it just like you know, really just like put its mind seriously into the business of going down, right? So you don't have that kind of diversity of thought and purposes that in the typical, equity or even like a foreign exchange market that creates like sort of up and down, more volatility, that kind of thing, right? So that's the thing you notice. So given this information, does that help you does that inform your view in terms of your time horizon? Go back to the question, what's your time horizon? So to me, it does, right? Because this tells me, as opposed to like, if I can do like more like, if my time horizon in the equity market, I can do like 2 or 3 or 4 days, because that's like generally when the market is the time horizon of a like a short-term market trend, right? 2, 3, 4 days, and then it reverts, and then another 2 days maybe, and then it reverts. In the crypto market, I will probably look to have a longer time horizon than that. It's just because this market has a stronger tendency to trend on either side, right? So then how long should your time horizon be? Again, you can just like you can look at this thing by just looking at the trend in the past, right? If you look at the January, you had like a mini bull market here. How long did it last? Here we have like 30 days. Here it says like 35 bars, but really in earnest, market was going up for like 20 days, right? 20 days, 20 to 30 days. And then you had another like a mini uptrend in like October, November, that lasted 15 days. And then if we go back, July, August, that uptrend lasted 30 days, okay? And we can still go back even more. Here, we had like March 2022, like a little uptrend lasted about 3 weeks, okay? 20 days. Now, this is the bear market, okay? How about the bull market? We go back to 2021. 2021, October to like November, December, that like a uptrend went up for like 40 days, okay? And before that, another uptrend from July to like September 2022, that lasted about like 45 days. And before that, you get my point, I hope, right? We don't have to go through all of this. You can go look at this yourself. But if we go like early 2021, you have these small like up waves. How long do they last? 25 days, 20 days, 20 days, like 15 days. And then before that, in 2020, when the post-COVID bull market just started, you had like some uptrend, like waves lasted 45 days. This one is like 27 days. 25 days. This one is like about 30 days in July, August of 2020. And then the post of post the crash of COVID after March 2020, that was the longest, right? That one lasted like more than 50 days, right? 52 days here. So, and you can go back to look at even more like a longer time series. But what's the point? What's the point I'm making here? What conclusion can you draw from just the the data that we just looked at? The conclusion, my conclusion, okay? My conclusion from looking at this is that this market has like an uptrend. When this market is in the uptrend, it usually lasts somewhere between like 15 days to up to like 50 days. So basically 2 weeks to a month and a half. That's generally how long these waves last. And in the bear market, it's like these uptrend episodes last shorter period in general, right? It's usually 2 weeks to 3 weeks. In a bear market, especially the beginning of a bear market, they can last longer. They can go to like 40, 50 days. So that is the answer to my holding period, to our time horizon question, right? So now I have the answer. And again, we are just constructing this example investment framework, right? So let's say our horizon is, now we have the answer. In bear market, we are going to look at 15 to 20 days. That's the time horizon. In bull market, we are going to look at 30 to 50 days. That's our time horizon for this particular framework, okay? So once you have this fixed, you know that, because again, the reason we pick these time horizon, pick these holding period essentially, is because you look at data and you realize that's generally how long a uptrend in this market will be able to hold up before it reverses to some extent, right? So that informs your decision. All right, now question number 1 done. And then your question, the next questions. When do you enter? When do you take profit? When do you take loss? Now, here's the part that once you have question number 1 determined, you know your time horizon. Now it's kind of I wouldn't call it like a really like a easy process, but it's at least it's a simple process, because there are all sorts of strategies out there, okay, in just to that fit this time frame, okay. Essentially, there are if we're talking about 15 to 20 days or 30 to 50 days, we're talking about some sort of like some sort of strategy to catch a trend of this time frame that we have decided, right? Then all you need to do is just go look for this type of strategies to see what you can find, and then go pick one. And that will decide and that strategy essentially will be your criteria of entry and exit and loss taking. It's simple as that. No, I don't want to sound like I don't want to make it sound like oh, it's like this is super easy to do. Obviously, any strategy you choose, you take a period to actually familiarize with your strategy, and there are lots of details. But at the end of the day, once you decide your time horizon, and you decide, okay, this is my goal, I'm going to like play this kind of time horizon, and in this market, you essentially have a much clearer direction in terms of what kind of strategy you're going to be looking for, right? At least now you know what you are looking for, instead of just searching blindly because you don't know what exactly you're searching, right? And then when you hear people say something, make a comment about like prediction about, okay, are we going to be a bull market or bear market? Then your question immediately is like, is this person talking in alignment with my time horizon or not? If it's not clear whether this person is speaking the language of my time horizon, then I don't have to hear a word, right? Because it's totally irrelevant to me. So, but essentially, after you decide on this time horizon, you go look for strategies. Now, seriously, you can just do some internet searches and go find these strategies. They are available out there, and they're like pretty. And after you find some, you go look at whether these things make sense, right? But to speed up our process, okay, you can literally go Google this. But essentially, to speed up our process, make ourselves more productive, I'm gonna just ask ChatGPT, what kind of strategies will fit our time horizon, right? So here I asked ChatGPT to recommend 3 profitable strategy for trend following and momentum with an average holding period of 15 to 45 days. Okay, so then you get a response in like 5 minutes. So these are what ChatGPT says. It recommended 3 strategies. I know like some of you are sitting at home and laugh at this. How can this be so simple? But really, seriously, if you actually read what ChatGPT says, it's a productivity tool, right? You're gonna find the same thing if you go search for the internet and go sign up for a $5,000 courses. You're gonna find pretty much the same rationales because these are just like tried and true ideas. Okay, essentially, it's just like but obviously the devil is in the details, right? The big picture is the same. You know, if I go get a haircut, I go for like a American hairdresser, or I go for like Argentinian hairdresser, or I go to a Japanese hairdresser. They are all essentially cutting my hair. All right, they're doing some layering, they're cutting my band, like doing some like small fine tuning. Essentially, it's the same deal. It's just like cutting hair, right? Your hair is long, it needs to be shorter. That's your goal. Okay. And but what's the difference? Your hair will look different slightly because it will be essentially at the end of the day, it will be styled a little bit differently, right? They will like cut the angle a little bit different here and there, right? How much like a layering they're putting in 3 layers or 4 layers. Essentially, it's the same shit, okay? Basic idea. It's just like long hair needs to be cut shorter. That's the goal. So that's essentially a lot of times what these like these investing strategies, when it comes down to these tactical level, once you decide on your big picture goal, then the strategies are really just variations on the same theme. Okay, so let's see what this ChatGPT has suggested for us. It suggested number 1, moving average crossover. So again, just briefly for those people who don't know, this is like a very simple strategy. You have a fast moving average. Like here it's giving an example of 50 days, and you have a slow moving average, which it says 100 days, and you buy when the fast moving average cross the slow moving average to the upside, and you sell when the fast moving average cross the slow moving average to the downside, right? Okay, so that's the one trading strategy, basically capturing the trend. So the idea, because we want a trend of 15, although I would say like if you're going to moving average crossover and we are holding period is 15 to 45 days, I see no point of using a 50-day to 100-day moving average, right? So I will use a shorter moving average just to fit our time frame, but the idea is the same, right? So that's the first strategy ChatGPT says. And the second strategy, it says it's RSI, relative strength divergence, which is like, okay, if your stock price goes up and RSI index does not go up, that's the time to sell because the trend is weakening and vice versa. So that's number 2 strategy. And number 3 strategy, okay, it's like a breakout. Okay, this one, he's telling you, I don't know, ChatGPT is not a he, definitely. It's a it, it's a they. Okay, they're telling you breakout strategy, you identify some kind of support resistance, and then you go like buy a breakout or you sell a breakout to a downside. Okay, that's in the nutshell of what these things are. There are a gazillion variations on these things, but again, it's just a styling difference with your haircut. Essentially, it's the same thing. It's just trying to capture the trend, okay, or the momentum. So so what we're gonna do is let's just say we are going to implement the number one suggestion by ChatGPT. We're going to use the moving average crossover, right? It's like very simple to execute. So let's go back to this, our framework. When to enter, now we know moving average crossover to upside. When do you take profit? That's when moving average crossover to downside. Okay, now you already three questions down. All right, so let's see, what does this look like on our total crypto market cap? Now I'll put, I already set the two moving average up here. I said it, what I said is like 8 day and 21 days. Those are not magic numbers, okay? Please don't read too much into this. You can set whatever number you want. You can set 5 day, 10 day, 9 day, 7 day. Not a huge difference, right? Because it's trying to capture the same shit, essentially. So but here I have 8 days and 21 days. Let me make this line clearer because this color is not very clear. Okay. So so essentially, all right. Now, if according to this strategy, when do you buy? You buy when we have a crossover, right? So like very lately right now, you had a crossover on like Tuesday. Well, actually, this is UTC time, so it depends on your time zone. For me, it will be actually the Monday. All right. So this past Monday, that's when that crossover happened. All right. But you can also say, okay, I'm going to anticipate a crossover here because I've noticed this trend is very strong coming off on Sunday. And then I'm going to anticipate it. So because it looks like it's definitely going to cross over. So I will just go buy even before the crossover happens. You can do that too, right? So, but this is like, again, fine-tuning details. Once you decide, again, you need to decide on what your framework is. Once you have a framework, then you work on fine-tuning, optimizing, all that kind of things, right? But first of all, you need to have a consistent framework. So now, once you have this framework, remember once you have this framework, now your decision making is a lot more robust compared to just someone listening to some random person talking on Twitter, right? So you now remember last episode, I was like, when this Silicon Valley Bank thing just broke out last Sunday, I put out this episode. I said, what did I say? I said, okay, this crypto market is reacting to the Fed is setting up these emergency liquidity facilities. And but essentially, my assessment was the SVB was not a huge deal. All right. Maybe the Fed is a little bit overreacting, but they're reacting to calm the scare in the market. But I don't think that means a reversal of monetary policy. So that was my assessment at the time. So I thought at the time, my opinion was this move, all right, coming as soon as that announcement was made, you see crypto market started going up. But at the time, I thought this move was to be faded. That's what I said in that episode, right? So, but if you have a framework, if you have a investing framework, do you really care about what anybody says? You don't, right? Whatever this Tascha person says, you don't care because you see if moving average crossover is your strategy, you see moving average crossover happens, then you buy because that's your strategy. Doesn't matter what anybody says. Okay. So you like when you have a consistent strategy, you don't really care. Who else's opinion is. Like I don't even care what my opinion is. Even though I said Sunday evening, I had the opinion, my opinion was this move was to be faded. But did I take advantage of this move? Yes, because Monday morning I wake up, I see, okay, this was not fading. And then also I have a framework for decision making that is independent of my opinion. Yes, I take my opinion into account, but is that a like a essential component of my strategy, of my framework? No, because my opinion can be wrong all the time, right? But eventually, what's gonna help me is to have a consistent strategy. So I fade my own opinion all the time, you know? It's like at the end of the day, it's good to have an opinion because it gives you some, it helps you to plan, helps you to have like a outlook on, what kind of thing is likely to happen so that you don't have to be like a reactionary all the time, right? Because it gives you some kind of forward-looking view that gives you some kind of wiggle room, some breathing room in your planning and your decision making. So it's helpful to some extent, but it's not like an end all be all. When you have a framework, that framework is going to be your end all and be all, right? So so essentially, so if that's your moving average crossover is your strategy, then you will buy Sunday or Monday, no matter what anybody says, right? So similar thing, if you go, if we go back, right? We have like a bull run in like in January, and then the market drop. It was actually, it gave you a lot of time. This move was not volatile at all, right? Because it gave you essentially 2 weeks of time, 2 weeks of additional time. The market was just like doing nothing. So you can make up your mind of what to do, right? So the move was not drastic at all. It was very polite. It was very orderly. So, at the end of February, at the beginning of February, according to your moving average strategy, this is time to sell, right? So almost time to sell, and then you crossed like definitely this moving average, like when this fast moving average went down and then it crossed over. So again, so this is just like one simple framework to help you make consistent decisions, right? Instead of being swayed by however the wind blows. So, okay, so then we have like 3 questions decided. Now the first question, when do you take loss? Again, all of your decisions are consistent with each other, right? So if you know that your strategy is these like 15 to 50 days, and your enter and exit is according to some kind of moving average crossover, and then when do you take loss? Isn't this very clear just based on your existing component of your strategy? So if you are taking this, if your strategy is moving like a moving average crossover to the upside, that's when you buy. Now, you set a stop loss. What is the natural stop loss? That will be at the bottom of your moving average, right? Because if say you bought like on like a Monday UTC time, this is Tuesday. Actually, let's yeah. Tuesday is fine. Let's do it like Tuesday. If you bought on Tuesday, because you saw this moving average crossover, now you like this is not a ticker, but again, it's the crypto market all the same, right? It's the same rationale. So how would you set your stop loss? You set a stop loss right below this faster moving average, right? Because if your stop loss get hit, if this price drops down to your stop level, that means there's no longer a crossover, right? The crossover thesis has failed, invalidated, right? So that's when you should be getting out. So again, you naturally now, because of your other component of your strategy is set, now you know exactly when to take loss, right? You take loss when moving average crossover fails. That is, you set stop loss below fast moving average line, right? So that's how you now you have like 4 components of your framework all set. Now, the next thing, Now you're like, we are almost there, right? We have like most part of our framework. Now we just need to know which tokens to select. But again, essentially, this is also your go back framework, right? We go back to our crypto market price data. You know, like in generally in any market, I talk about this in the previous episode too. You have two or three kind of basic patterns. You have mean reversion, you have trend. So the market will trend until it's no longer trending, then the mean reverts. Once the mean reverts, it starts trending again to the other direction, right? So you have this fluctuation or the yin and yang of these two components constantly at play in the market, which is like a basic pattern of any market, including crypto, right? So does that inform you in terms of which token to select? It does, right? Just based on these, like if you think about it, based on these two basic market patterns, if you are in a downtrend, if the market is in downtrend and it hits some kind of, and it starts reverting, that's when beginning of the mean reversion, right? So like the beginning of January, you know at the time that market had been trending down for quite a while, right? So at this time, and it's starting to revert. So I talked about this before. In this type of scenario, what type of names that will go up the most? The ones that are down the most, right? Because again, we're talking about like mean reversion. You have to when this early uptrend started, that mean reversion is the dominant theme, right? So whatever tokens that are down the most, that's the bunch of names that you're gonna look. You're gonna search among those in order to find your gem, right? So that's at the beginning of a up move. Once this up move gets going, all right. So we had this up move at the beginning of January. We had it for like over a month, right? And then you corrected, and now it's up again, right? Since a week ago. Now it's no longer. Well, it depends on your, again, what's the time frame that you look at this. But to me, this is no longer a strictly speaking market reversal from the deep bottom, right? Because we had a wave of a pretty big kind of uptrend a month ago. This is essentially market corrected, and then it wants to go up again, right? So it's no longer sort of like a strictly speaking kind of like a deep reversal from like a bear market, right? So then at this stage, the kind of a trend components start to be at play, right? So the trend component is just like whatever went up has a tendency to go up even more, right? So this is time you may be thinking about, okay, I'm going to go look among the tokens that went up the most at this first stage of the market recovery, because those I know give me the information, those will be the most active names that have a more likelihood to go up the most, because those have strongest trend, essentially, right? So essentially, at first, when market was just like coming out of like a deep bottom, you play the mean reversion. So you go look for the biggest reversals. You go look for those that went down the most. But as the market get going, you look for those names that have the strongest trend. So that's the basic idea. So if you have those like a framework in mind, you know exactly what you're going to look for, right? So at this stage, so at the beginning of January, you would look for those like really beaten down names and see if any of them are starting to turn up, because those have the likelihood to go up the most. And then once the market get going, once we have like now at this stage, you go look for those that have the strongest trend over the past 1 or 2 months, right? So like for me, like I actually track this, right? I personally track this like just manually, using my own program. So what names do you see here? So these are like basically a list of tokens that went up the most in the past 30 days. Okay. But I have a market cap criteria. So these are like a market cap above, I think it's 100 million. That's the market cap criteria. So what do you see? Conflux, Stacks, Liquidity, Caspa, I don't know what this is. Caspa, MX, Floki, Marble X, Blocks, Immutable X, Neo, Mask Network, Injective, Singularity Net, Maker, Flexcoin, Gains Network. So if you track these things on a regular basis, you will notice that, so this is for the past 30 days, okay? Past 30 days, it went up the most. But if you go look for, if you go back, if you track these regularly, you will notice, if you haven't tracked, you just have to take my words for it at like currently, right now at this stage, right? Until you go look for it yourself. So you will notice that half of these tokens, half of these names that I just read out to you, they were also the ones that went up, some of the best performing ones in the January bull run, okay? So in other words, there is a continuation of trend here. So if this is something that you notice this pattern, what are you going to do? Even if you don't track these manually like me, but this is like super easy to do, right? You just go to like whatever trading platform that you're buying these tokens on. They will list, okay, what's the best performers in the next 90 days or next 30 days or next week. Even on like large these listings on coin market cap, you can go find these information, right? In the last 30 days, among the top 100 tokens, these are the ones that went up the most, right? You get a list of these and you put in your watch list and you just look for those, and keep an eye on them, right? Because you know those are the most active tokens. And then once the market turns, once you have like a market signal that tells you, okay, you have, remember here, we have selected the moving average crossover, right? But once you know that this market is starting to turn uptrend because you had a moving average crossover on the market, then you go back to your list of most active tokens and you look among those that match your moving average crossover criteria, right? Because those are likely the ones that went up the most, that go up the most next, because they historically in the past month, they had a strong trend. Provided that you don't go buy something that is super extended, right? So, but my point is, once you have a framework, you will have the answer to these. Each of these questions, they just they work with each other. It's an integral part of the whole. Every part is the integral part of the whole, right? So that is my point. And if you have this, if you have your strategy, does it matter whoever says on Twitter, oh, this coin is going to go up. Oh, that coin is super bullish. What do you do with those information? Those if you have like if you have your independent framework, you will not be swayed by those information, right? Because whatever coin is like you don't really need people to feed you information. You don't need like any newsletter or any influencer to feed you information and tell you, okay, this is the coin you should look at. The coins you should look at is already, in the performance chart, right? Those are the coins that you should look at. So, and we're almost done. All right, which token to select? These are either it's a mean reversion play or it's a trend play, right? Depends on which stage of the market we're talking about. Okay, we're running out of space, so we make this smaller. Okay, now finally, your management of your position. How big is your position? This is also, it's also like depending on the rest of your strategy, the rest of your building blocks, right? If you have decided that you are going to take loss, basically somewhere below your fast moving average, right? So let's say this is a ticker, and then you set a stop loss that is like on this day, Tuesday, and this stop loss is like you bought at this point at the top of this bar, and then you set a stop loss like below this fast moving average, which about like you want to give it more room, so you set it like basically 10%. I'm not saying this is necessarily your stop loss, right? But I'm just giving you an example, okay? So 10% is basically your stop loss. So then all you need to do is like you just need to make one decision, right? The one decision about this is like what's the max amount of money you're willing to lose, essentially, right? So if you're willing to lose, let's say 5% of your capital, then it's easy, right? So that's the percentage of your capital, percent of the capital max loss divided by your percentage of your stop loss. That will be the size of your position, right? So for example, if you decided, for example, if you decided 5% is the max loss on your total capital, you're willing to lose on this like one decision, okay? And your stop loss is 10%. And what do you get? 5% divided by 10% is like a 50%. That is the amount of money that you can put in on this one position, which is 50% of your capital, right? So if you decide you are willing to take 10% of your total capital loss, I'm not saying that's the amount that you should be willing to lose, right? That's really, up to you. 10% is what you're willing to lose, and your stop loss is 10%. And then that means you can put 100% of your capital in that one decision, right? So my point is, these decisions, they all work with each other. It's not like an ad hoc decision that you just happen to think of on the day, at the minute when you need to make a decision, right? So once you have this framework, isn't like everything like just a lot easier compared to you just like randomly collect some information, randomly collect some indicator, right? It's like today you're using some moving average. Tomorrow, okay, you like listen to ChatGPT, you're going to try this RSI thing. And the day after tomorrow, okay, you're going to look at the moving average. You would not do that kind of thing, right? Because if you mix all these things together, there will be no strategy, right? Your strategy needs to be consistent. So essentially, that is like one example of what I mean by you having a consistent strategy, right? So essentially, you know that your goal is to make money, right? It's like your goal is to go from here to, I'm in like Washington, D.C. I want to go from here to New York. What can I do? I can run, I can walk, I can bike, I can take an airplane, but there has to be some consistency, right? If I want to take an airplane, then I need to like go to the airport. I need to call an Uber, for example, to get to the airport. I need to buy before that, I need to buy a ticket, right? So I cannot say, okay, I'm going to buy a plane ticket, but at the same time, I'm just going to walk to New York. It doesn't make sense, right? Then you does not make sense to mix all these things. Once you have a strategy, all the steps of your implementation is going to follow that strategy, right? Obviously, you see people in action movies, right? They first hop on the train, and then halfway they jump on the motorcycle, And then they hop on the car, and it's a very exciting sequence of action. But those people, they are professional assassins, right? Are you a professional assassin? You're not, right? So you your journey will be a lot more pleasant if you stick to one thing, right? If you just like I'm gonna take the train from here, from Boston to New York, that's all. I'm not gonna bother with any of other transportation vehicles. And your life will be so much easier, essentially. Whoever tells you, okay, the plane's faster, you know, maybe if you just run from Boston to New York, that's like a very pleasant. I doubt it, but some people will say that. But would you listen to that? No, you won't, right? Because you've decided you're going to take the train. So anyway, this is like we are going like super way over time, but I hope this is helpful. Okay, so I will talk to you next time. Bye.